Good morning, everyone, who have joined today's webinar session. My name is Walter, and on behalf of CGS CIMB, I would like to welcome everyone to today's webinar joint organized by Bursa Malaysia and CGS CIMB. This webinar today will focus on the overview of Malaysia's pharmaceutical sector, its outlook and future prospects, as well as Duopharma's plans to capitalize on these trends. Joining us today will be Mr. Leonard Arif bin Abdul Sattar, Managing Director of Duopharma Biotech Berhad. Let me just start off with a brief on Mr. Leonard's profile. Mr. Leonard has more than 30 years experience in the legal, chemical, and pharmaceutical industries. In 2008, he was appointed as CEO of SCM Duopharma Biotech Berhad, which was then under CCM Berhad. Then he was made a director of CCM Berhad Chemical Division from October 2014 until December 2015. On 9 January 2015, he was appointed Group Managing Director of CCM Berhad and served in that position until 28 December 2017, when he was appointed to the board and redesignated as Group Managing Director of Duopharma Biotech Berhad. To Mr. Leonard, welcome. On the proceedings of the call on this webinar, we will begin with a brief presentation of Duopharma, presented by Mr. Leonard, followed by a dialogue session on the Malaysian pharmaceutical sector. We will then open it up to a Q&A session. If you have any questions at any point during the presentation, kindly type in your questions at the Q&A chat box below. At this time, I'd like to turn it over to Mr. Leonard Arif. Thank you.
Okay, thanks Walter. Thank you very much. And also thank you to CGS, CIMB and Bursa for organizing today's session. And hopefully you'll find it enlightening in terms of giving you an introduction of Duopharma. And subsequently, when we move into the discussions about the industry landscape as well. All right, let me just start with my presentation. I'll try to keep this reasonably short. As far as the corporate structure is concerned, we're reasonably lean. We try to keep it only to one level. The chart is a little bit busy. But generally speaking, each of our entities as subsidiaries of Duopharma Biotech Berhad represent operating units, whether marketing or manufacturing. Over the last few years, we've also taken equity position in some overseas companies in line with our strategy. The intention is to get marketing or manufacturing rights. In addition to these minor investments eventually become listed entities carried on our balance sheet. So we've got a previous investment, Pengen, that was executed by our time when we were part of the CCM group. And subsequently, after we demerged, we also invested in another Korean biotech company called SCM Lifescience. That's partially due to the exposure into stem cells. Okay, right. Now, in terms of equity structure, the largest portion of our equity is actually held by the PNB group of companies, either directly by PNB or through its funds. So at the moment, PNB has approximately just above 51% of equity in Duopharma. Second largest shareholder happens to be Employees Provident Fund. It varies between anything, I think they've gone down as low as 6%, as high as 9% in terms of equity. The rest is free float. This is actually quite interesting because among majority of pharmaceutical companies that are listed on Bursa Malaysia, Duopharma Biotech actually has the highest free float in the open market. Now this was intended in order to create some level of velocity in the share trading of Duopharma as well. As far as our board of directors is concerned, we are chaired by Transi Siti Sadia. A lot of the audience today may be familiar with her due to her background in KPJ for many, many years. So she comes with a very strong knowledge of the healthcare sector. Then there's myself. Our senior independent is Datuk Muhammad Kamaruddin, ex-civil servant. He was he held a senior role in Matrade, which is the entity under the Ministry of International Trade for exports. We have Cik Razali, who is Datuk Kamaruddin is also the chair of our NRC. We have Cik Razali, who is the senior independent. He chairs he's independent and he also chairs our Audit and Integrity Committee. We have Puan Zaitun. Wan Zaitun's background, she was a country manager for a multinational pharmaceutical company in Malaysia for many years, and she joined our board as well. Datuk Aisyah. Datuk Aisyah's background is in regulatory, in pharmaceuticals. We got Datuk Nick. Datuk Nick is the chair of our Halal Committee, and he has a background where he was heading IKIM in Malaysia. We have Datuk Muhammad Razif, who chairs our Risk and Sustainability Committee. And his background, apart from being a banker, he was also the CEO of Institute Jantung Negara, IJN. And of course, the most recent entry into the board was Datuk Dr. Zaki, a well-renowned nephrologist in Malaysia, and has a long and illustrious medical career in the private sector as well. And he continues chairing some of the major medical NGOs in Malaysia. So I've already mentioned all the committees under the board, so I won't repeat it again. As far as the management committee, one feature that for those who've been following Duopharma for a number of years is the stability at the management committee. So it's a lot of familiar faces, some of whom have been in Duopharma for a number of years, and some of whom moved over to Duopharma after we demerged from the chemical company of Malaysia. The newest entrant into our management committee is on the bottom right, Cik Shamsul. Cik Shamsul is the CEO of a newly created subsidiary called Duopharma Consumer Healthcare. This was set up mainly because consumer healthcare as a proportion of the business has been growing quite aggressively over the last few years. So consumer healthcare now is anything between 18 to 20% of our business. So we decided to set up a standalone subsidiary to actually manage that business today. Some of the financial highlights based on the last quarterly report that we issued, which was in March. Generally speaking, the performance was within expectation. Obviously, the MCO only affected us for the last 2 weeks in March. But having said that, we didn't notice any fall off in terms of demand during the initial period of the MCO, because a lot of the customer base we have continued operating through the MCO, albeit maybe with a slightly lower capacity. So whether it was the pharmacies, the GPs, the private hospitals, government hospitals, etc., continued to operate throughout the MCO in one form or another. What we were impacted, so the revenue line was actually held up quite well. Where we were impacted, however, in the first quarter was the depreciation of the ringgit relative to the US. So we have in our portfolio certain borrowings denominated in USD, and obviously we had to make the appropriate adjustments, accounting adjustments for the weakening of the ringgit. Now this quarter we see it seems to have stabilized, and if anything slightly stronger than where we saw the exit in first quarter. As far as the balance sheet is concerned, no major changes. I think the line that I will focus on is probably the gearing line. At the moment, we're 0.5 times in terms of gearing. We've announced various projects moving forward within Duopharma, our manufacturing improvement projects. We're putting up a new factory in Klang. We've just completed a new warehouse in Klang as well, and various other investments. By the time we fully draw down our investments expected sometime in 2021 and 2022, we expect our gearing levels to go up to approximately 0.8 times. And that's more or less where we're comfortable with. Return on equity in first quarter was in line with expectations, and also in line with the return on equity which we enjoyed last year. In terms of segmental sales, about 48% of our total business is the government side. This fluctuates month-to-month basis. Exports is approximately 7%, and private sector, this includes the medications that we supply to GPs, private hospitals, pharmacies, and also our consumer healthcare business. This in totality comes up to about 45%. So we're a reasonably balanced portfolio within the company, and we tend to put equal weight, whether it's a strategy in regards to the government business albeit the strategy in regards to the private sector. The one area that we seek to grow is the export sector. One of the biggest issues affecting all pharmaceutical companies in Malaysia is the scale of the Malaysian market. At 33 million is relatively small, and therefore, even where Duopharma is at the moment, we're already the largest producer by volume of pharmaceuticals in Malaysia. But if you take that as a percentage of market share, we're only at about 4 to 7%. So it's an extremely fragmented market. Now, our international presence, as I said just now, was about 7%. We export to ASEAN, Asia Pacific, rest of the world as well. Biggest markets at the moment tend to be Singapore, Philippines as well. But we've had some success in sub-Saharan Africa as well, and we continue putting focus there as well. So as I mentioned earlier, we've done certain investments. Investments are less about getting an investment return, more about getting access to technology and also the ability to get marketing and in some cases manufacturing rights as well. So we invested in a company in October 2018 called SCM. At the time we invested in the company, they were focused on stem cell development. Subsequently, they have now expanded into immunotherapy. They've invested in one of the few stem cell GMP facilities in the US. And this is progressing quite well. Our interest to participate was obviously get marketing rights for their pipeline. And the specific therapeutic area we were looking at was actually in the derma, the skin area. Subsequently, SCM has invested in a company in the US called Co-Immune. They own 51% of that at the moment. And that has one of the few CGMP stem cell facilities in, well, globally actually. Now, this particular company will be actually listing on Kosdaq this week. So we look forward to see what the results. Our equity partially is held in strategic form, partially non-strategic. So we'll be looking at selling down some of our non-strategic while we look for other opportunities available as well. Another investment that we did in the first quarter was an investment we started considering towards the end of last year in 2019. And this was in a local startup by the name of Naluri Hidup, Sdn Bhd. Naluri Hidup is a local pioneer in digital therapeutics, and we see the ability to use this platform in a way that we are able to focus our business also onto wellness, but using their platforms on a private basis also for certain activities that will support the wellness of our patient base. We're still working with Naluri at the moment. The app in itself is already up and running. We invested 250,000 US, just slightly over ringgit 1 million. But we do see that as things progress, as I said, we started looking at this investment prior to the MCO, but the MCO has given us a clear indication that some sort of digitalization in healthcare will have to occur as we move forward. Things will never be the same again. And we need to be looking at how we incorporate digitalization into the business model that we have in Duopharma. We have a manufacturing strategy. This is where a lot of the borrowings is going into at the moment. On your screen at the moment is a list of the investments that we're doing all the way up to 2022. This year, we're going to complete our pre-filled syringe line. As part of our investment into PenGen, we always contemplated that as the product gained traction in Malaysia, we would actually start back integrating. So the first step in the back integration is the pre-filled syringe line. This will be the first in Malaysia for biological. Next year, we're building a new pharmaceutical facility, small molecule in Klang, to replace our pre-existing facility that was built in the 70s. And we are now contemplating building a biologics facility in Malaysia, and this is as per our investment in PenGen, going even one step further back in terms of integrating manufacturing, bulk manufacturing. And this will be the first biological bulk manufacturing for this range of products. There is another bulk manufacturer in Malaysia, but that's specifically only into insulin. And of course, in 2022, we will complete our upgrades of our facility in Bangi. So as far as strategy is concerned, these are the four main strategies. It's underpinned by our focus on halal as a differentiator and also our people management. But we're diversifying into biologicals because back in late around about 2010, 2011, we highlighted at the time, even to the investment community, that if we didn't change track, margins within the pharmaceuticals, especially into the small molecules, here we're talking about the tablets, the capsules, etc. With the level of competition and the opening up of the global economy, we expected that we would suffer from a margin squeeze. We then decided to move into high-value biologicals, and at the same time, to look into niche areas within the small molecule that we thought we could differentiate Duopharma in. At the same time, we're also expanding our range of consumer healthcare products. We're already currently the largest supplier of vitamin C to the Malaysian market. We're also using that as a platform for exports into Singapore, into Philippines and Indonesia, and also within ASEAN like Myanmar, Cambodia, Laos as well. We have very well top-of-the-mind brands like Flavets. For adult vitamins, we've got Chewy's, children's vitamins. We also have some analgesics that we are selling like Euphamol, which we are in the middle of promoting at the moment within the Malaysian market. So with the expansion of the product range we have and designing these product registrations to make sure they match other country regulatory requirements, we are also expanding our footprint within the ASEAN region as well. And of course, as mentioned earlier, we're upgrading all our facilities to make sure that the facilities are able to meet the highest level of standards so that it allows us to register our products easier around in the targeted countries. So some of the opportunities, obviously there's been an increase in allocation by the Ministry of Health. We're taking advantage of that. Some of our contracts, as there's a particular range of products called the Approved Pharmaceutical Product List, APPL, that usually is a contract that's awarded every 3 years. The last cycle was only awarded for 2 years, but it was extended by a further 25 months up to the end of 2021. So that gives us some level of line of sight in terms of predictability of earnings until the end of next year. We work with a partner in terms of supplying insulin to the Malaysian market, and that contract has also been extended until the end of this year. We're in the midst of negotiating extension of that contract as well. We're commercializing quite a number of our biologicals for the first time. Erisa, which is our EPO, erythropoietin, was the first one that we have actually commercialized. We are now participating in a government tender, so we're hoping that that will be awarded over the course of the next few months. At the same time, through our partner, we were also the first company to register a monoclonal antibody biosimilar called trastuzumab. So that has been registered in Malaysia and already commercialized quite successfully as well. We've built a high-active pharmaceutical ingredient facility. This is a facility that's designed to handle raw material that is dangerous to the operator. And the general, it covers quite a lot of products within the oncology side. So in some cases, we call it our oncology facility, but the accurate name is HAPI facility. We've already registered the first product coming up from this facility. We're now doing the validation batches, and we hope to be able to convert from imported to domestic manufacturing for a product called letrozole, which we're supplying to the Malaysian government. We hope to be able to do that within the course of the next 6 months. And of course, we continue expanding our range of vitamin C products as well. Some of the challenges, obviously, the COVID-19 has given us some interesting challenges. Being part of the essential services, we were able to operate through the strictest form of the MCO, albeit at a 50% headcount capacity. Having said that, because of the stock levels, finished goods stock levels we have, we were able to meet all demand, even though headcount levels had to be reduced. Having said that, we're still monitoring in terms of performance. Certain sectors have remained reasonably resilient, like the government sector. If anything, government sector increased a little bit. I think mainly because the government was giving out longer prescriptions to patients. Private GP, we saw it softening a little bit during the MCO period. We're hoping that it will recover now with the recovery MCO. Private hospitals, similarly, we saw some softness in demand. But as far as pharmacies, private pharmacies and chain pharmacies, the demand held up throughout the MCO period. The other challenge for us, 35% of our loan portfolio is denominated in USD. So that impacted us greatly with the weakening of the ringgit. So what we are in the middle of doing at the moment is looking at refinancing our loan portfolio in order to not only ringgitize, but more importantly also to reschedule repayments, etc., as appropriate, in order to make sure that having gone through MERS, SARS, the global financial crisis, etc., we very quickly changed our mode into one of ensuring survival and cash flow, which is very key for us at the moment. Raw material prices, or the weakening of the ringgit, also poses a problem for us because we have long-term contracts with the government at fixed prices denominated in ringgit. And when your raw materials are denominated in USD, you have the challenge, the twin challenge of fixed prices and higher costs as well. So that's something we're managing very closely. Obviously, CGMP requirements continue to be something that needs to be done. It's a license to operate while we are expanding our portfolio. So that's it, Walter, for my presentation. Hope it wasn't too long.
Yeah, Mr. Leonard, thank you for the presentation. I think it was just about right in terms of time. So shall we just move ahead for the dialogue session about the Malaysian farming sector? So can I just kick off by asking, based on your estimates, what is currently the Malaysian farming sector worth at current times, and what do you think are the growth drivers of the Malaysian pharmaceutical sector?
Okay, as far as the total pharmaceutical sector, it depends very much where you draw the outer line of the donut. You've got the ethical, which is the medicines portion. Then you've got the consumer healthcare, the discretionary portion. Then you've got the natural as well, the natural therapies, etc. But generally, in terms of consumer healthcare and also ethical products, our estimation of the market is approximately anything between 4 to about 5 billion US. So you're talking about just over 20 billion ringgit. So even though Duopharma is the largest producer domestically at about 600 million ringgit, it gives you an idea about how fragmented the market is. You've got the multinationals, you've got the domestic producers, all taking a portion of the pie. So it is a very fragmented market, and that's something that most people don't realize. Main growth drivers in this industry, especially in what I call the formalized sector, and this will be largely the ethical or the medicines, the products that you require a prescription for. The largest growth drivers tend to be aging population. You've got non-communicable diseases, and of course you have better diagnostics. Now, all this has driven demand in Malaysia quite extensively. And now, most of you would have probably realized that in last year's budget, the Ministry of Health had an increase of almost 6% in terms of allocation to the Ministry of Health. Some of this was capital investments, but some of it was operational and pharmaceutical purchasing. So at the moment, the government already spends just above 30 billion ringgit a year in terms of the healthcare. So a lot of the diseases that we're seeing that's driving, like non-communicable diseases as well. So if you look at the non-communicable diseases, you're talking about hypertension, you're talking about diabetes, you're talking about renal. So obviously with better diagnostics, you're finding a lot more people being diagnosed earlier, and that also drives the level of pharmaceutical consumption within the country.
Right, thank you, Mr. Leonard. So just to have an idea, in Malaysia, up to 70% of drugs are likely to be imported, while Malaysian local drug makers contribute only up to 30% of domestic drug demand. Can we just have an idea why do local drug makers such as Duopharma unable to cater for more of this demand for drugs? Is it an issue of capacity constraint, or is it just limited market demand for local drugs?
Okay. Good question, Walter. I think one thing you have to realize is 32 million population, 32, 33, scalability is one of the issues. The other issue is in regards to a lot of the raw material in this industry is actually imported. Anything up to 60 to 70% of the raw materials are imported. So there's a high reliance on foreign entities in order to be able to operate effectively in Malaysia. Now, the third element is also in terms of patents. Obviously, all the producers domestically in Malaysia are generic manufacturers. So we're only able to manufacture those products that are off patent. A lot of the patents are registered. Those days used to be in US and Europe, but now we're noticing a lot more patents registered in India and also China as well. So do we have the capability of doing research in order to have products that have never been identified before? I think the answer is definitely yes. The problem, however, is the cost in developing some of these new drugs. You know, there's anecdotal evidence that says for every 100 candidates, only one is successful, and each candidate will cost you probably easily anything up to 1 to 1.5 billion USD. So the sheer cost of developing products in a market which is very, very small is something that it's not easy to do. Is it impossible? Definitely not, because you have countries like Switzerland who've been reasonably successful in terms of as a manufacturing hub for global needs for patented medicines. I think the more the government encourages pharmaceutical producers, whether it's domestic to expand or whether it's international to relocate some portions of their capabilities into Malaysia, at some point or other, we will be developing certain products. I think the biggest challenge will be the sheer cost of development because the regulatory pathway in order to get a new drug is extremely expensive. There are certain key parts of the supply chain that are not available in Malaysia. For instance, animal testing. We don't have any facilities for animal testing beyond rodents. We are unable to do clinical 1 trials in Malaysia. Now, all these need to be put into place before you can even think about developing a new drug in Malaysia. One other thing is probably worthwhile pointing out, and this is the reason why Duopharma has invested a lot in biologicals, is unlike small molecule medicines, the tablets, the capsules, where we have to rely almost 60-70% on importing of the raw materials, whether it's the active material, whether it's excipients, etc. With biologicals, your raw material is dictated by your cell lines, which you can develop domestically. So therefore, it uses less reliant on overseas entities, and you're able to do more in-house than you did probably in the past with small molecules.
Talking about this, Mr. Leonard, can you just share with us how many products do Duopharma plan to release on a yearly basis, and then on so many types of different product offerings, which segment is Duopharma targeting to grow in, especially in Malaysia?
Okay. Back in 2008, when I joined this business, it was actually quite interesting. The cost for developing a generic was anything between 200,000 to 300,000 to 400,000 ringgit per generic. So it was reasonably cheap to actually introduce a new product in Malaysia. Today, fast forward 10 years, the average cost for developing 1 molecule is probably, and this is a generic, okay? So the research has all been done. You're just doing a copy that meets the regulatory requirements. You're talking about anything between 1 to 2 million ringgit, okay? So it's a very, very large investment. And as such, we have to be very cautious about our product choices. This was one of the reasons we decided, because of the cost of developing generics was becoming more expensive, we had to take a more focused approach. So in answer to your second question, consumer healthcare is one area we're focusing on, especially on the back of our adult vitamins. We've put in a lot of money both into development and also A&P on our consumer vitamin C Flavets brand. In the ethical side, we focus in a few areas. We're focusing on cardiovascular, we're focusing on renal, we're focusing on diabetes as well. in addition to 1 or 2 additional products that we're focusing. This allows us to taper somewhat our area of focus so that we're able to develop new products in markets that we're very, very familiar with, as opposed to taking a hit and run approach. I think the days of taking a shotgun approach to pharmaceutical development is not easy. And as I said, in general, we are focusing on anything between 8 to 12 products a year. And even between 8 to 12, that's going to cost us anything between 10 to about 14 million ringgit every year. So we are cautious about how many products we actually launch, and we make sure it's only in those markets that we're very comfortable with. Okay, Walter?
Yeah, Mr. Leonard, if Duopharma is taking an approach of basically having several targeted areas of focus, just talking about this, do you think Malaysia pharmaceutical players, including Duopharma, has any potential to basically grow beyond just domestic selling and maybe overseas, focusing more exports? Because if you see in terms of value of Malaysia pharmaceutical sector, exports is a very small portion, even for Duopharma itself, around 7%. Do you think how can we actually encourage local drug makers, including Duopharma, to actually grow more into the export market? Are we less competitive in terms of pricing, or we have less of choice for people to choose in? So how actually can we grow exports of Malaysian drugs overseas?
Okay, I mean, one of the biggest issues tends to be the regulatory side. And in that sense, Malaysia has done very well. Our regulatory authorities under the Ministry of Health are very, very well respected. So I think we don't have any problem with the quality of products that are being manufactured in Malaysia. One of the biggest challenges tends to be scale, because obviously if you're putting up a facility in a market like India, in China, in Indonesia, your domestic market represents a huge potential. Whereas in Malaysia, with a 32 million population, we're somewhat limited. And that limitation tends to dictate the size of the scale of the pharmaceutical factories that are built in Malaysia. Can we expand? Definitely we can, but we have to be clever about it. We have to go into those areas that are more niche, those areas that don't require large factories to drive economies of scale, because there are certain changes, technology changes all the time. So even if you look at biologicals, for instance, 10 years ago, you needed to put stainless steel incubation vats. Nowadays, you can do it in disposable plastic packaging. So I think we need in Malaysia to identify what niche we want to go into. That's partially the reason why Duopharma invested in an oncology facility, because there were no oncology facilities in this part of the world. We invested as far as consumer healthcare. We invested in an effervescent facility, because outside of Indonesia, there were limited effervescent facilities in this part of the world. We've invested in biological fill and finish. Again, there's limited biological fill and finish facilities in this part of the world. So I think when we look at the export market, we have to just be a little bit cleverer about it to make sure we don't replicate what we can't compete against. And that's very, very key. And the pharmaceutical industry is huge. There are products even to this day that are not made in Southeast Asia that one could consider manufacturing in Malaysia and be competitive at the same time as well. Now, the last part, I think the government has a big role to play. The largest insulin facility in Asia is actually in Malaysia. It's owned by a company from India, by Biocon, which is a partner to Duopharma. They've put up the largest insulin facility in Malaysia. Up to today, the total amount of exports that Malaysia does as far as pharmaceuticals is only circa 600 to 900 million ringgit a year. This one facility that was built in Malaysia would easily double or triple the level of pharmaceutical exports that we do in Malaysia. So I think for the health of the entire pharmaceutical industry, it's useful for the government to be proactive in terms of encouraging more manufacturers to come into Malaysia in order to expand the pool of talent that we have in the country, and also expand the level of services that we're able to offer to the market. Okay, Walter?
Yeah, Mr. Lai, talking about this, if you are highlighting that you think the Malaysian government should actually encourage more FDIs into the Malaysian pharmaceutical sector, do you see this more of a threat to Duopharma as a local drug maker, or do you think this will actually create more healthy competition for everyone to grow in the Malaysian pharmaceutical sector?
Okay, I start from the guiding principle that competition is good. It helps in terms of pricing of the product to the consumer. Don't forget that we are in the healthcare services, and the government funds almost 70% of healthcare in the country. So you can understand why, as far as the Malaysian government is concerned, they're always very conscious in terms of the pricing of pharmacy, what it pays for the drugs that it consumes. There have been studies recently that do some level of benchmarking, and generally speaking, the prices that the Malaysian government has been able to achieve is actually lower than what is enjoyed by other countries as well. Competition will always be there, which is one of the reasons, as I said, when we looked at 2009, 2010, we understood that competition was here to stay. We understood that margins will be squeezed if we didn't choose to move into newer areas. And that's really where Duopharma has moved to, especially in the course of the last 5 years. If you look back at it, back in 2009, 2010, biologicals as a percentage of our portfolio was less than 4%. We only had one biological product, which was heparin, that was used in the renal sector. Today, out of our total portfolio, approximately 20% of our portfolio is now biologicals as well, and we hope to grow that. That will allow us some level of buffer against the level of competition that we see coming into the country, because at this stage, we don't anticipate there'll be a lot of biologicals that will come to the country, but possibly you'll be looking at multinationals who open because of how well-placed Malaysia is as an export hub for the region as well. And of course, with the geopolitical movements at the moment, people do not want to be over-reliant on any particular country. So that opens a great opportunity for Malaysia to allow some of these multinational pharmaceutical companies to also operate in Malaysia. As far as the competition, I mean, that's a given in this market.
All right, good to know that, Mr. Leonard. So just talking about a new topic, which everyone's interested in terms of the COVID-19. What from the perspective of a Malaysian pharmaceutical company, what do you think are the key takeaways or observations from this COVID-19 outbreak in Malaysia? I mean, what can Duopharma do, or do you see new areas of growth from COVID-19, or potentially what could Duopharma partake or help government to basically combat COVID-19?
Okay. We're not in the masks, the gowns, the PPE market, nor do we intend to get involved in this market. Back in 2010, 2011, we announced to the investment community that we actually built the first human vaccine fill and finish facility in Malaysia. This was built at that time because we were working on a potential project to launch a meningitis vaccine in Malaysia. That project did not come about, but we had already built the fill and finish facility. So obviously, eventually, if a vaccine is found for COVID-19, depending on the type of vaccine, we could be well placed in order to offer our facility to the Malaysian government as well, to be used as a means of fill and finishing the ultimate vaccine that is found. Again, it depends on who crosses the line first and what type of vaccine it is. The reason why this is key and why recently I think you would have seen, some of you might have picked up the announcement in Singapore that they are rushing to build a fill and finish facility, is because generally the rate limiter in vaccines are less about the manufacturing of the bulk vaccine. The rate limiter tends to be how much of that vaccine can you put into vials for marketing purposes. So if you queue in line for a vaccine and you're queuing, the line will be shorter for bulk than it would be for finished. So that will give Malaysia some level of ability to source vaccines, depending on the type of vaccine, faster than a lot of other countries. So from that point of view, Malaysia is in a pretty good space, if you ask me. Now, as far as what else could be done, now, Duopharma has a range of antivirals. These are tablets, tablets or capsules. Now, I think it's very, very key that strategically as a country, we have to ensure that the level of basic first-line antivirals is sufficient. Now, Obviously, for the products that are off patent, it's easy to do for the Ministry of Health to do it, to make sure that whether it's Duopharma or other companies within the industry, to have it on their portfolio. These are what I call first line defense. Then the next step is to also look at the possibility of saying, okay, what sort of vaccine capacity should Malaysia have moving forward? Now, there's lots of different vaccines. There's no such thing as one factory fits all. And that's the problem. You have to select, are you going for bacterial? Are you going for viral? And of course, the moment you go into bacterial, viral, are you looking at different formats of these vaccines? So we have to be very cautious in Malaysia that we don't take a shotgun approach to vaccine. It's topical, it's top of mind at the moment, and there's always the temptation to do something big when you come to something like this. But I think we have to be cautious as a country in terms of how we approach it. I think the way we've approached the management of the pandemic through the through the MCO, the CMCO, and now the recovery MCO, and looking at the numbers that we're facing, I think the how we managed it has been exemplary in Malaysia. And thanks a lot to the Ministry of Health, the Ministry of Internal Affairs, etc. But having said that, we learned from the Spanish flu that the more deaths occurred in the second wave than occurred in the first wave. So we have to keep vigilant, and I think we're going to have to continue keeping vigilant at least until a vaccine candidate comes about. Now, whether a vaccine candidate will come about by the end of 2020, assuming it goes through normal regulatory channels, the answer is 100% no. Because you need to be very, very cautious about how you develop vaccines, and more so, you have to be very cautious about ensuring that the vaccine you develop to solve one problem doesn't create other problems. And we've been battling for a vaccine for dengue for close to 15 years, and no matter how much money has been thrown behind it, there's only one vaccine candidate that's been developed for dengue. And the problem with that is it helps you for one serotype of dengue, but makes the symptoms for the other 3 or 4 serotypes even worse. So, you have to realize this eventual vaccine is supposed to treat humans. And then you're going to have to see how is it managed by humans at different age groups, pediatric, healthy adult, non-healthy adult, aged population. So when you do a clinical study, it's not very easy. So I think my message would be that Malaysia has to take a targeted approach and a very well thought out approach to make sure it's not money down the drain, ultimately, in terms of how we approach COVID-19. At this point in time, the best way to manage the disease is not so much a vaccine, because one doesn't exist, but is to maintain personal hygiene, social distancing, etc. Thanks, Walter.
Yeah. So now they're talking about this, I think recently, a lot of companies, listed companies have been talking about doing, PP related products, just now you also mentioned that, Duopharma has no interest going into manufacturing PPE. Can we just have an idea why is the reason that Duopharma has no interest, given that Malaysia have shortage of PPE, or even on a global scale there's shortage of PPE? I mean, do you think this is a potential area of these consumables to go into in terms of this product usage?
Okay, in a non-COVID world or non-pandemic world, there is no shortage. Okay, it's basically due to the nature of this particular pandemic, the utilization even for existing users like hospitals increased tremendously. And then you add on to that the consumer side. Now, why isn't Duopharma interested? In August last year, we bought masks for our production at a price of 18 cents a mask. Okay, today the limit in the pricing is 1 ringgit 50 cents. That's the government mandated pricing for the standard surgical mask. We buy masks on a regular basis for use in our production. So in August last year, it hit the lowest point, which was 18 cents a mask. Now, when we look at the economics, we don't understand, because remember, eventually we will get over the pandemic, and eventually people are not going to be wearing masks to the office. you're going to find a stabilization of demand with a huge influx of supply. So if in August last year, when we didn't have a pandemic, I saw mask prices at 18 cents a piece, I would imagine post-pandemic, when the demand goes back to normal, that you may find that mask prices will have to go even lower than 18 cents a piece. And it's not a market that we are very keen. I mean, well, first and foremost, we're a pharmaceutical player, so PPEs are a totally different business sector altogether. But more importantly, we don't think longer term the economics will justify such investment. There will be other companies who may be able to do it to scale, who may be able to market much better than a company like Duopharma, etc. Good luck to them. But as far as Duopharma is concerned, we will not get involved in PPEs at this stage.
All right, Mr. Leonard, we have two questions from the participants of this call. So let me just kick off with the first. The first is, what is Duopharma's view on raw material sourcing? Because currently, in Malaysia, pharmaceutical players are very reliant on China, India APIs. So do you think it's possible to develop a similar supply chain in Malaysia or in the region to basically have lower reliance on countries such as China and India?
Short answer, yes, it's possible. The more difficult question is, what raw material do you want to develop self-sufficiency for? Okay, a company like Duopharma, we're the largest in Malaysia. We have approximately active about 400 products. And the amount of raw material used for that 400 products is probably you multiply by 4. It's a raw material, the excipient, the coating, the sugar, whatever. So you're talking about potentially 1,600 different raw materials. It's easy to say that we want to be less reliant, but we need to identify what do we want to be less reliant on, because there's no way we can be totally unreliant on India and China. I think what helped the pharmaceutical industry, not only in Malaysia, globally, because globally, India and China tends to be the primary source for a lot of raw materials. We were extremely lucky that the closure of India coincided with the opening of China. Had it happened concurrently, India and China were locked down at the same time, then I think it would have been very few producers chasing after very little raw material, and we would have seen prices shoot up. But because India locked down as China was opening, a lot of companies were able to change their sourcing from India to China. And I wouldn't say seamlessly, because China, even as they came out of the lockdown, there were still limitations in terms of supply, in terms of supply chain, logistics, etc. But it could have been a lot worse. It could have been a lot worse. Duopharma started, we had our first meeting on COVID-19, if I remember correctly, was the 3rd of February, when WHO announced level 4 warning before it went into a pandemic. And the first item of an agenda was exactly this, that in the event a pandemic was declared, what was our position on raw materials? So we went through our finished good level, our raw material stock levels, etc. And we continue monitoring this on a weekly basis. But as India locked down, we saw opening in China. So that allowed us some level of breathing space. As a policy, we tend to keep a high level of finished goods stock anyway, because it's mandated by contracts we have to the government sector. So we always keep finished goods reasonably high. We keep a comfortable level of raw material goods, and there are two reasons for that. One is obviously to fulfill spikes in demand in the government, public or private sector. But secondly, as a means to also manage our exchange rate exposure as well. So in some cases, we would take forward orders, quite a substantial amount of forward orders into raw material in the event that we saw the ringgit strengthening. So I think globally, we were let off with the COVID-19. It could have been a lot worse. As I said, if Italy is also a large producer of raw materials globally as well, especially into Europe. So if you had Italy, China, India locked down all at the same time, it would have been a major problem. So, is there a need to diversify out of China and India? Definitely there is. It's not healthy to have that level of concentration. However, it's usually these countries that have a large domestic demand that can build capability across a large range of APIs, whereas or active ingredients. Whereas Malaysia being small, we have to be very selective as to which products we want to be self-sufficient. So I'll give you an example. On the back of, let's say, the fear about a future pandemic, and if we decide antivirals is the area that we want to focus on, then maybe focusing on construction of API facilities for antivirals might be an area that's worth considering. But should we be totally self-sufficient of APIs globally? The answer is just not possible. And even if it was, you'll be looking at your drug prices just too expensive for people to afford as well. Walter?
Right. Thank you, Mr. Leonard. So another question is about, potentially dispensing separation. A lot of people have been talking about drug and medicines which will be dispensed by pharmacies rather than prescribed and dispensed by doctors themselves. What do you think? What's your view on this matter? Do you think it will be much cheaper if for drug prices will go much cheaper if they're going to be dispensed by pharmacies rather than doctors? What's your view on this matter?
Okay, as far as dispensing is concerned, it's not right to say that every country in the world has separation. Okay, you've got countries like Singapore that still hasn't legislated separation between prescribing and dispensing. Now, it's also not entirely accurate to say that Malaysia has a totally fused profession. Although by law, it's not mandatory to have separation, but in practice, if you look at government hospitals and also private hospitals, generally speaking, they already separate the function. So here, when people talk about separation, I presume they're talking about separation at the GP clinics, etc., because hospitals have more or less separated voluntarily, not by legislation. Now, when it comes to this matter, as far as Duopharma is concerned, our penetration rate into high traffic outlet pharmacies, as well as what we call independent pharmacies, is almost 90%. Similarly, we have about a 90% penetration rate in all GPs, 100% in government, 100% in private hospitals. So we are well positioned, irrespective which way it goes, separation or no separation. Having said that, one of the major arguments for separation has been, and it is a truism, the fact that a pharmacist spends 4 to 5 years studying just medicine, whereas a medical professional, a doctor or a specialist may only do it as part of their overall degree, and therefore the knowledge base in pharmacists are a lot better. Now, that being the case, the one issue that I see in Malaysia is I have yet to hear of cases affecting patients caused by either wrong drug, wrong dosage, etc. No data is being collected to support the separation. That's issue one. Issue two is we're still producing 3 times more doctors a year than we're producing pharmacists. Okay, so doctors are being produced at a rate 3 times higher than pharmacists. So as a result, you find while we're used to seeing pharmacy clinics all around town because we live in an urban area, if you go into the more suburban and rural area, you may find a GP clinic, but you're not going to see a pharmacy there. So I think any attempt to separate has to take into consideration, because ultimately you're doing it for the benefit of the patient. Will it lead to lower prices? Now that's going to be very, very interesting. I'm not sure, to be quite honest, because there's going to be, whether it's into GP channel or pharmacy channel, the supply chain cost doesn't change. The raw material to manufacture the drugs doesn't change. There's very little that would change as a result of separation, because you have pharmacists today already dispensing against prescriptions, and you've got doctors also dispensing. I don't see where the cost saving will occur within the supply chain as it currently exists. Will it be better for consumers? Well, I think it's a truism to say consumers will get better advice as far as pharmaceuticals are concerned. And definitely for those patients that are what I call doctor shopping, they go to different doctors, etc. So they end up with a handful of multiple medication. In those situations, I think having the advice of a pharmacist is extremely key to make sure that you're getting the best out of the medication that you're getting that's been prescribed for you. Is Malaysia ready for separation? Again, I think urban, yes. Rural, definitely not. And these are some of the considerations that will have to be taken into consideration in any policy change. But as far as Duopharma is concerned, we don't anticipate any impact to us in the event separation occurs, because the pricing model we have is identical, whether it's GP or pharmacy. And our penetration level into pharmacy and GP is also exactly the same. So even if separation were to occur, we don't see that to be, will impact Duopharma. Okay, Walter?
Right. Thank you, Leslie. Last question from the floor. There's another question about COVID-19. They also highlight that how could Duopharma participate if a vaccine emerges? I know you just now briefly talk about your fill and finish facility, but do you think that there'll be potential tenders if the vaccine emerge, or is this going to be a G2G agreement to buy, purchase vaccines? So how would Duopharma be able to participate in this kind of tenders, with the exception of your fill and finish facility?
Okay, yeah. With our insulin business, we also do last mile delivery for the insulin. So it doesn't go through the concession route. We actually deliver it directly to the end user route. So obviously, Duopharma can participate in terms of distribution of not only just fill and finish, but also distribution, last mile delivery. There are, at last count, over 100 different vaccine candidates for COVID-19. Some companies are slightly in advance. So you have a company in the US called Moderna. You've actually got 4 vaccine candidates from China. My view is that whatever final vaccine identified should be for the general public good, okay? Which means it needs to be made available to the widest range of people in every country, not just Malaysia. Now, I take note that some countries have decided to invest in certain multinationals who are developing their own COVID-19 vaccine. But generally, those investments are basically to fund the company's acceleration of their development. Because the way vaccines are usually developed is it takes a very long time frame. And that's also dictated by the amount of money you allocate. So I think governments are contributing money towards the research on the off chance that it is to allow the progression of it faster, and the off chance is success. Obviously, if you funded part of the research, you will get some level of prioritization. Personally, I have a bit of a problem with that, because there are countries, low-income countries, that don't have the latitude to do that. Are we now saying these countries will not have access to the eventual vaccine, which I think raises some interesting ethical questions as well. We have actually offered our facility to the government of Malaysia already, as and when a final vaccine candidate. We have said that be careful, let's see which vaccine is supposed to cross the line first. And we highly recommend that Malaysia negotiates on a G2G basis, as opposed to involving the private sector into any arrangement, because the chances of us being allocated the vaccine on a G2G basis will be a lot higher than if we try to approach it from a commercial basis. Because remember, the COVID-19 doesn't discriminate by age. Yes, we haven't had many very young patients, but that's partially because they're not taken out of home as often. If we had a practice of taking babies out, then chances are the rate of infection will be higher among young children. And obviously, the age people aging above the age of 70 because of either other pre-existing conditions are also subject to bad side effects, assuming they come down with the COVID-19. So we need to make sure that whatever vaccine candidate we have is safe for usage. And safe means going through the requisite clinical 3 study. It's interesting to note that China has 4 candidates, vaccines, and they are all moving into clinical 3, so they're much more advanced than a lot of other countries, which means that the early stage development did not have to be rushed. Some of the early stage development that you do in vaccines is to ensure that it's safe in humans. So that's the part that you don't want to rush, because humans come in all sorts of forms: healthy, unhealthy, large, small, young, old, etc. So you want to make sure that whatever final vaccine is safe for consumption across the plethora of age groups in Malaysia. So as far as Duopharma, we, as I said, we've offered our facility to the government of Malaysia, the fill and finish. Hopefully that will allow Malaysia to be able to access the vaccine, whichever vaccine crosses the line first, we're able to access it faster. And we are in a position to also offer the last mile distribution of that vaccine throughout Malaysia and inclusive of Sabah and Sarawak as well. So that's where I see a role for Duopharma as we move forward, Walter.
Okay, thank you, Mr. Leonard, for your time today. I think it's about time we have for today. So we'd like to thank Mr. Leonard for taking the time to speak with us today. We'd also like to thank all the investors who have dialed into this call. If you have any further questions, please feel free to reach out to your respective CMB salesperson. Once again, thank you all for joining today's webinar session, and please have a good day ahead. Mr. Leonard, thank you for your time today. We really appreciate it. I think we have gotten a lot of good key takeaways from the call, especially from Duopharma as well as the Malaysian pharmaceutical sector. Thank you so much for your time today.
Thanks, Walter, and thanks to the participants as well. Really appreciate it.